Hello, everyone. So today we will focus on discussing why earnings calls are important. So when you watch the news, pretty much every single week, they will announce that, oh, company so and so released their earnings this week, and they'll mention like some of the highlights or lowlights. And you might be wondering, well, who cares, right? And so earnings calls are really important as it gives investors or potential investors just an overview of how the company is performing overall. So any company that's publicly traded will have to submit their financial results to the SEC, and they also have to publicly discuss their results. And so in preparation of their calls, they are going to provide or submit summaries of their financials to show the updated actuals. They'll also show previous actuals, and they always give color around what is going on. Now, I say the word color because that is what people are notorious for using or saying whenever they're discussing results for earnings calls. So whenever someone says color, it just means they're giving insight or details as to what is going on. So if the company is doing well, they of course will highlight what is going well, why is it going so well, and also they do give forward-looking statements. And so that essentially is an estimate of what they see happening for the rest of the year. So they may discuss potential acquisitions, new business strategies, things like that. They also give a guesstimate as to where they think they will land in regards to full year revenue results and earnings per share, etc. Now, if the results are bad, and I'm laughing because whenever there are bad results in an earnings call, they never want to focus on that. They very much are deliberate in not highlighting that, but focusing on what did go well or what will go well in the future. And so you'll notice they always want to put a positive spin when the financial results are bad. Now, the reason for that is they don't want Wall Street to get nervous and get spooked, and they don't want to have this huge influx of investors selling off their shares. Because if investors are selling off shares, the price of the stock will essentially decrease and sometimes tank. And so, what you will notice as an investor, when a company has their earnings call, Wall Street responds within 24 hours. And I'll kind of show you what I mean by that. If Wall Street believes what the company is saying, or they like what the company has said in terms of their results, the stock price will go up. And the opposite goes true as well, right? The company isn't doing well, or Wall Street doesn't believe that they will do well in the future, the stock price will go down. And so, if you are not already following me on this page, please go ahead and subscribe. I do complete a weekly recap every single week on Friday evenings. And I do give a summary of some of the really important earnings calls that happened in the previous week. So if you want to learn more about that, just get a better understanding of how to read financial statements, what highlights you may have missed, definitely tune in and you can see that every single week. And I do have replays of previous live streams, so feel free to check those out as well. So let's kind of level set and say, well, what is an earnings call? So earnings call is essentially where a company will go through all of their financials, lowlights, highlights, etc. And so I'm going to pop up an example on the screen. We will look at Amazon press release. So whenever a company has an earnings call, they also will submit a press release, which is essentially a summary of what happened. So whenever there's an earnings call, it's usually going to either go over the previous quarter's results. So right now, most companies are issuing their Q2 results because Q2 ended in June. They usually need a full month to finalize their financials and then publish those as well. And so I know before I got into corporate, I never understood why companies take so long to publish their results. Let's talk about that before we jump into this Amazon press release. So when a company ends a financial quarter, let's say June 3rd, well, let's go with this example. June 30th, Q2 ends. Now the company will spend about 2 to 2.5 weeks finalizing their books. So what that means is you have individuals in accounting and finance doing various activities, right? So they're going to look at what happened in that month or in that quarter. to see, are things posting correctly to the general ledger? Do we need to make any adjustments with journal entries? Do we need to make any corrections? And so that is what takes companies so long to publish their results. When a company is closing the books, it does take a good 2.5 weeks, especially if they are a global and large organization. You're talking about multiple entities across multiple countries, time zones, and all of these financial individuals in accounting and finance have to work on closing the books. So they're looking at thousands of transactions, hundreds of thousands of transactions. And then you have another team that has to like summarize everything to say, well, does this make sense? And if there are any anomalies, they have to figure out what happened and why. Now, I can speak to this because I've done that for about 18 years in my career as someone who worked in corporate finance. And so, very well versed in month end, quarter end, year end close processes. And those days are grueling. They are really, really long, long days, long nights, constant flurry of emails trying to figure out what's going on. And so when you are in this closed process, you really can't publish anything because nothing is final. It is essentially like a moving target until you have this drop dead date to say, okay, whatever happened at this point, that is it. We're done. Books are closed. It's time to publish the results. And they also need this time to make sure things are being reported accurately. So as I was just mentioning, right, if individuals are looking at financials and things look weird, they look off from what we expected, we have to understand, well, is this a mistake? If it is, how do we correct it? If it's not a mistake, well, what happened and why did we not know about it until now? So coming into a quarter close, companies are usually reviewing the financial to see how are things looking in terms of revenue, expenses. But of course, that's just preliminary numbers. Nothing is final until we close the books. So if there's something that's really off, it's like, well, why, what happened here? Why didn't we know before today? That might be a red flag, a broken process somewhere. Who knows? It could be anything. And that's essentially why companies take so long to publish their financials. So first they have this 2.5 week process of closing the books. Then you have to go through this review process. Then you have to publish the results, get them approved, and then say, yes, we are ready to discuss this to the public. And so part of it is finalizing the financial results. The other part of the equation is painting the picture, right? What picture are we going to paint for the public, Wall Street, and our investors? And so a lot of time goes into that because essentially the picture you publish, the picture you paint dictates what happens to the stock price. So that is why earnings calls are really important. And that is why investors really do pay attention to these calls. And mind you, the calls themselves are really boring. They're really dry, lots of business speak, definitely a snooze fest. But they have these beautiful things called press releases. And these press releases it's like a cliff notes to the earnings call. So you have to listen to the whole 1 to 2 hour earnings call unless you choose to. But once you've heard a couple, you've heard them all. It's nothing extraordinary, I would say. But I will say the benefit of being on those calls live is you can really get context as to how the leadership handles uncomfortable situations. At the end of most earnings calls, you will have a 10 to 15-minute window where analysts from multiple companies are able to ask questions to the leadership team that is running the call. Now, some of the questions, in my opinion, I can't say for certain, I think are they're like easy layups. Like they already know the question is coming, so they already know how to answer it. But there are other situations where there clearly was no prep, and these questions are being fired at them live, and they have to navigate the question. So depending upon how intensive that question is and how the leadership responds is very telling. It really can let you know, are things really good or are they just like painting a rosy picture, but things aren't that great? So that's the one benefit. Outside of that, really no good benefit in listening. Unless you never heard one before, I do recommend you should always join one just to see the format, just understand how it goes, but just be forewarned that it is really super boring. But press releases make it really easy for you to understand the highlights. You can see the financial statements, and you get a nice, pretty Cliff Notes version of what the company has going on and what you can expect in the future. So here we have what Amazon published about a week and a half ago for their Q2 results. And so here they're just discussing that net sales increased by 13%. They give some color, right, in the bullet points to say, well, what regions drove the increase and what business segments drove the increase. So you see that here, North America segment sales increased their 11%, yada, yada, yada. They also discuss net income, cash flow. Now, everything in this summary is here because it's positive, right? So you will notice that whenever you look at a press release, it kind of already tells you what thing, like, how to say it. You will already know if things are good or bad because of what they choose to highlight in that first segment. So just keep that in mind. We'll talk about another one that might be a better example versus Amazon, because Amazon had a really good Q2. So this isn't a good example of that, but it is showing you that they did well. So after that, they're saying, hey, sales was this, operating income was great, net income increased, right? It's a pretty rosy picture. So next, you will see forward-looking statements. And so here, Amazon is saying how AI is going to change the customer experience, and essentially they're leveraging AI to change how they operate their business. And I will say, of all of the earnings calls that I discussed last week, every single company touched on AI in some shape or fashion. And we will see that more and more as time goes on. As we know, AI is ultimately transforming how companies do business, how we operate in our lives, and ultimately how we operate in our own careers. And so I'll say this briefly. I don't want to go too far into it, but AI is something that you can't ignore whether you like it or not. It's just where we are right now. We are definitely in a version of the Industrial Revolution. And it's one of those things where if you don't keep up, you will get left behind. Right. So to kind of bring it all back home, as an investor, you should be paying attention to AI. You can't ignore it, right? We are still in the very early-ish stages when it comes to AI, and things are going to progress, but it is an industry you should be paying attention to and consider. I'm not telling you have to, but consider adding it to your portfolio. So just be mindful of that. So what you will also see, this is just lots of words. We can skip that. But what you will also press release is a copy of their financial statements. So, this is too big for the screen. I'll keep it here. Okay, so cash flows, we'll kind of skip that. I don't usually cover that in my earnings calls, in my weekly recaps. But what I do focus on is their P&L, their profit and loss statement. So quick summary of profit and loss statements or P&L statements or income statement, they might call it, depending upon the company. It's basically just saying revenue, sales, expenses, net income. Lots of other things in between. That's the overall gist of what an income statement is. And so what you will see is they always will have like a year over year comparison. And sometimes they'll do a quarter over quarter comparison. So for the year over year, this example, you're seeing Q2 of 2025 versus Q2 of 2024. And then over here, they're showing H1 of 2025 versus H1 of 2024. When I say H1, first half of the year, right? So the first 6 months, January through June. Now, my pet peeve in looking at this, and this is just so superficial, but my finance brain can't help it. You should always have variance columns to the right. That kind of tells you the dollar variance and percentage variance. So dollar variance lets you know how many millions more or less did it perform year over year. And then percentage helps you to say, well, did it increase by 10% or did it reduce by 20%, right? So I never understand when companies don't have variance columns here. But anyway, that's just a pet peeve of mine as someone who has a corporate finance background. Anywho, so whenever I am going through these weekly recaps, I also just keep it at a really high level, right? So we want to look at revenue or net sales. They're calling it here. You will also notice that in these statements, words are very much interchangeable, right? So here they're breaking down their sales by product versus service. Other companies will have it stated as revenue. So, but it's all the same thing. It's just, like I said, the words are used interchangeably. So here you're going to see revenue went up versus last year, right? 167 versus 148. Basic stuff. Then what I like to look at is net income, which is essentially profit, right? So you have your revenue, and everything else in between here is just their operating expenses. So I don't focus too much on that. It is a bit of a snooze fest. That's just all what this stuff is in between. And net income is just what they have left over. And so net income, which is profitability, that's the number that's really the most important, right? Increased sales, great. Ideally, reduced expenses. That's what you want to see. But ultimately, regardless of how you get there, investors want to see increased profitability. And luckily for Amazon, they were more profitable this year versus last year. You can see that here. You have 18 million versus 13 million. So that is definitely a positive thing for investors to see. And you have other financial statements here as well that you will see, but again, nothing, it's a big snooze fest. But ultimately, what I like to recommend for people to look at and focus on is going to be the press release summary at the beginning. And then, if you so desire, the financial statements. Now, the reason why financial statements are really important, it really tells you what's going on behind the scenes, right? In their advertisements, in these press releases, they can say whatever they want, right? But the numbers really tell you the truth of what the company has going on. And so that is why I personally do like to look at a company's financial statements. It's very telling as to what they have going on. Now, of course, trying to research every single company's financial statements on their website can be a bit tedious. But this is where Yahoo Finance comes into play. They have a very nice section of their website that shows financial statements, and it's a really nice summary, in my opinion. So, and you can see this view whether you're in the app or on the website. In my opinion, the app is a bit better for this purpose, but you can see the information from either place. So it's right here in the financial section. And then you can look at whatever you want to look at, the income statement, balance sheet, cash flow. Most investors care about income statement. Second most important is balance sheet. The balance sheet kind of tells you how much cash they have on hand, essentially. And so with the income statement, you can see everything in one snapshot. You can see total revenue, and then you can see net profit, net income, which is right here, net income from continuing operations. And so I just don't like how the headers aren't like, they're not grounded. So when you're scrolling, you can't see what quarter you're looking at. So that's something that they really should fix. Outside of that, it's a really good platform. So you can see, right, revenue increased or decreased. So here for Amazon, obviously revenue increased from 2023 to 2024. You can see all of the expenses. You can expand this if you want to get real fancy to see what's included in there. And then you can see total expenses, are expenses increasing, decreasing, etc. And then last but not least, you just come down to net income, which is their profitability essentially. So I really like that you can look at pretty much every single company's financial statements here on a snapshot, which is why I really do recommend Yahoo Finance as a great starting place to do research. Now, this is not sponsored. They're not paying me to say this. I do personally use it. And I do find that it's a very user-friendly platform, whether you're on the website or on the app, just in my professional opinion. Because their earnings call was very interesting because they did not have they did not have a good earnings call. It didn't have good results, I should say. And so oh no, where did it oh, Hold on, I'm trying to get back. I had it open on Friday, but obviously since Friday, I've closed it. I've closed the document. So let's see if I can get it back. Oh, here is the. Is this what we looked at on Friday? I don't think so. This is more like a PowerPoint presentation. No, I don't care about your PowerPoint presentation. Um, mm, 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 mm. Where is? Okay, I guess we'll have to try that again. Hold on, guys. Let's see. That is so weird that I can't pull it back up. Let's see. Oh, here we go. Oh, that is crazy that I can't. Oh, here it is. Okay, I was gonna say that's weird. I was just looking at this on Friday with all of you, and now I can't find it. Crazy. Okay, so let us get back to it. So here is JetBlue's press release, and right off the bat, there's just lots of words, right? They're not focusing on the financials, and the reason for that is the financials weren't good. So that's what I mean by when they, depending upon how they put together or piecemeal together. Oh, this is their Q1. This is not, okay, this is not what I want to look at. This is their Q1. Hold on. Pause, please. Let's try that again because that's not what I wanted. That is crazy. All right, we'll just use that as the example since that's what I have. I don't understand why I can't pull the document that we were looking at on Friday. That's crazy, but it's okay. It's fine. We will make do with what we have because it was the same narrative, just different quarter. So it was not that big of a deal. Just want to show you guys an example. Okay, so if you recall with Amazon, they started right off the bat with saying revenue, operating income, and right, all the things. They went right into the financials. Whereas JetBlue, lots of words, lots and lots of words. And so they're focusing on, operational improvements, and they're investing in reliability and just lots of ways to just kind of smooth over the fact that our financials suck. That's really what that means. And so as someone who's been doing this a really long time, right, I just have an eye for that. But you will start to notice that too as you start to look at this stuff more. So you see, we're still scrolling. Now we get into the Q1 results, and so they show we had a net loss, operating revenue decrease, right? So you see nothing good happening. Well, I should say nothing good. Lots of not ideal results for JetBlue in Q1, and same thing happened in Q2. Nothing really changed there. So now see, lots more words. And so now we jump right into their financial statements and see the percentage change. This is what a company should have. They should have percentage changes and, in my opinion, dollar variance changes too. But, having the percentage also helps. It just gives you a snapshot. You can see off the bat, revenue is down 3%. Okay. Were they profitable or not? No, they were not. They had a net loss in Q1 this year and Q1 of last year. So JetBlue definitely is having a tough time. But in the Q2 earnings call, they did discuss how they are partnering with United Airlines in this Blue Sky initiative. So that should turn things around. They are focusing on reducing expenses. They've already had cost savings of $25 million since they began or initiated this cost savings project. So they're really trying to give investors confidence that, yes, things are not looking good right now, but we are working towards improving them in the future. So it's like, hear me out. I got a plan, So And as they should. You don't want to come on an earnings call and say, yeah, we suck and we will continue to suck, right? No one's going to say that. We have to really say, well, things aren't good right now. How do we turn things around? So then I want to show all of you how or what happens to stock prices when these earnings calls actually happen. So let's go back to Amazon just because we're already here. So their earnings call, I believe, was July 31st. I don't have my notebook handy, but I want to say it was July 31st. As you can see, the earnings call happened and the stock price went down. So whenever I see things like that, it lets me know that Wall Street does not have confidence in what they believe the company is going to show them in the upcoming months. I think with Amazon, though, specifically, they also have this slippery slope in that they are doing things to improve the company, but they also are facing things that are out of their control, like tariffs, right? So tariffs are definitely impacting their business negatively as customers don't want to pay the increased prices because of tariffs. So that means customers are either not shopping at all, or they are buying less, or they're taking their business elsewhere. And so this kind of reflects both of those narratives. So Amazon will have a tough road ahead. And then if we look at JetBlue, their earnings call, I want to say, was the 30th. And so for them, the stock went up a little bit. So I guess the investors felt a little confident. And then shortly after that, the stock price has been on a downward slope since then. But as I was saying, whenever there is an earnings call, you will see Wall Street respond to whatever happened or was discussed on that call. So that is why earnings calls are really important. That is why the news talks about it, investors focus on it, and you as an investor should also focus on it as well. It's a great way for you to just understand, is this company worth investing in, whether you are not invested in them now, but you're considering it? Or if you are already invested in them, do you continue to invest in them, or do you invest more, or do you invest less, right? So that's why you should try to pay attention to earnings calls, just to kind of see how are things shaking out. And this kind of comes down to, or I correlated to, performance reviews at your job, right? So we talked about how as an investor, you have your investor checklist and you want to vet the company before you hand them your money. So that's like going through the job application process, right? So you apply for the job, they look at your resume, they put you through a few rounds of interviews, they might do a background check, references, and then they offer you the job. So this is equivalent to you as an investor doing your due diligence before you invest in a company. Now, once you have made the investment, just like once you have the job, it's not just set and final, right? You have to kind of prove you deserve to keep the job. And so you have performance reviews mid-year, end of year, and essentially your boss will tell you how well you did and what you can improve upon. And then they may give you a raise or a bonus. So with investors, it's very similar. So an earnings call is a company just going over their performance for that quarter or for that year. And then for you as an investor, you must decide, are they worth investing in or not? So that's the analogy I like to use, which is why you should pay attention to earnings calls. Now, again, press releases will be your friend. It gives you a really nice summary of what happened, what you should pay attention to, and it can kind of help you understand what's going on, if you should continue to invest in a company or not. So hopefully that was a very helpful lesson for all of you. Now, if you do have any questions, feel free to leave them in the comment section down below. Also, if you're not subscribed, go ahead and subscribe to the channel. I do talk about a lot of things on this channel in regards to financial literacy. Investing, obviously, is one thing we talk about. I also do reviews on financial products, whether it's credit cards, bank accounts, investment accounts, etc. So if those topics interest you, definitely give this page a follow. I am also on every social media platform you could think of. I'm on TikTok, Instagram, Facebook, Threads, and obviously here on YouTube. So Feel free to find me on those platforms. I will have my accounts linked in the caption. With that being said, have a great day, guys. I'll talk to all of you at the end of the week. Take care.